So, kicking it off as always, first things first, couple headlines I want to go over. So, the market going down off of Trump tweets, right? China tension, trade war tension. And also we had Friday the earnings reports and that news on the banks and financial institutions and those bad loans, right? They're losing a lot of money, but it's still not enough to get scared, not enough to say, hey, there's some type of crack in the bank's infrastructure, right? This happened before in the past, right? We're going to see numbers drop every now and then from basically points in the economics basically where people can't pay their bills, people can't pay their loans, money is getting lended out, but the repayments aren't coming in. So that happens. That's basically what's fueling this drop, right? And that's basically what continued the drop into Friday with a slight recovery. All right, so this isn't like a recession drop. This isn't like economy's about to fall type drop, things like that. Oddly enough, the tariffs are doing their part in a good way, but there's still negative effects, right? That's going to be inflation and things like that still being an issue due to tariffs. So that being said, be mindful of the market we're in. Remember, I sent out some notes in the chat about the VIX, right? Watch the VIX. That'll definitely tell you kind of where you're at in the market when it comes to volatility, sentiment, and actual fear based off of, volume, price action, and what's going on in the stock market. So if you're looking at the stock market, right, and you're maybe trading a few stocks here and there, maybe looking at the SPY, but you don't necessarily know like the state of the market, the VIX will let you know, right? If you want to know if this is the type of market me as a new trader can trade in, or me as a decent trader can trade in, or even me as a pro trader can trade in, right? That's what the VIX is for. It's the volatility index. So when I tell you sometimes, right, it's okay not to trade that day or perfect setups only, the VIX will let you know if today might be a choppy day or if currently the market's probably going to chop you in and out of positions. And remember, what does that mean when I say choppy? It means that stocks will ideally either trade within a range, right? And we look for breakouts or breakdowns to determine further price movement. If we don't get those, then, getting in too early before a breakout, it might go against you and stay within that range. You can't find a good breakout to trade on. At the same time, choppiness also means you might get some moves, right? That's the opposite of what you saw. You saw a bullish setup, but it's not breaking out. It actually dropped on you or went a different direction, right? That's choppiness, right? Choppiness comes from certain sentiment based off of, economic situation, news, economic news, or data that comes out, right? That's only one half of it. Understand the other half of that choppiness are market makers and banks, right? Hedge funds and people who actually trade billions of dollars on behalf of somebody else playing with you. They're using that volatility to drop, big money to go against what they see. 8 times out of 10, the way we're trading, 80% of retail traders are trading the same way. That being said, these market makers are either going to go with you for their benefit or they're going to go against you. And if you're in the wrong trade, going the wrong way, you're going to lose against them. So understand, utilizing economic data, news, and things like that, and the VIX lets you know where you're at and gives you that edge to know how you should possibly trade or if you should trade at all. Okay. So refer to those notes again in the chat about the VIX. It'll tell you at what levels of the VIX, right, the market is basically at. I do want to say if we ever get some type of crazy drop, right, revert back to April. Remember, we love looking at the past to determine the future. So go back to this April, this past April. Look at what happened, right? That drop. Look at where the VIX went before that turnaround actually took place. Okay. Ideally, you catch that VIX at the 60s or higher, you want to start buying, right? Because historically, that's when you start seeing that VIX start to come back down. Now, I'm not saying the VIX is anywhere near there right now, but again, when using the VIX, right, there's different levels you look at to know where you're at in the market. Now, just a little lesson right there. Headline wise, right? Trump basically is talking a little softer about his tariff plan with China. All right, so let's dig into China, right? China has a strong hold on the world market, right? By that I mean the rare earth metal side of things. They're like, I think 80 something percent of the rare earth market. A lot of us, most of us are getting the majority of our rare earth minerals from China. Those rare earth minerals go into almost everything that we need, especially defense wise, right? Jets, torpedoes, bombs, missiles, submarines, ships, computer chips, things like that. All those things that are that are pertinent to us staying ahead of the game. We're getting our shit from China, majority of it, right? Majority of the world is getting the majority of it from China. So theoretically, Trump has to try to put some type of leverage on China to kind of keep ourselves neck to neck with them, i.e., them still giving us these rare earth metals at decent prices without crazy interruptions, right? So he's looking for leverage. At the same time, right, China doesn't necessarily 100% need the US, but it will hurt them to lose the US consumer because we're a larger part of their market when it comes to export and selling things. So that's the give and take. That's where the battle's at. That's the leverage Trump is trying to pull with these tariffs. All right, so understand that. Now, when I say he's getting softer with his talk about tariffs on China, he's talking about, yeah, we're still going to meet in 2 weeks in South Korea. We still like the president of China, whatever his name is, right? We still like him. He's a great person. We're talking. I'm sure he'll come to a fair agreement, right? And we all know we've been here about 3 times already. Threatens tariffs on China. China pushes back on Trump. Trump and China come to a deal, and the market goes back up again. That's why I'm saying don't be scared off of this, right? You need to pay attention to what's going on, but understand what's going on. This is another opportunity, possibly, to catch a nice dip for those companies that we like. But yeah, so that was the latest news is Trump's already verbally easing up on the tariff tension. Now, how do we use this? Rare earth mineral companies, ones that already have a stake, one that Trump's already, basically backing or the government's backing, as long as the government's in the pockets of those companies, they're probably going to be the go-tos and play a big part in Trump's battle to stay ahead of this rare earth mineral game, right? We can't just talk about it, we have to be about it. That being said, he's definitely going to lean on production, mining, right? Transportation of these minerals and even turning them into what they're supposed to be. So what we need to center our research around in this game right now that's going to take place or currently taking place is companies like MP, right? Companies like TMC, the mining company, right? Companies like LAC, the lithium companies, ETFs such as UUUU, which is uranium, okay, those type of things. Now, we've all been in the courses about how to research and where to look. That being said, we know the center of attention, right? Now we want to kind of branch out ahead of everybody else into the pick and shovel, right? Once these minerals are mined, right? Who's refining them for us? Who's turning them into what they're supposed to be? Who's transporting these minerals, right? These companies that are actually mining and refining these minerals that we're going to need to be produced ASAP. Who's providing the equipment and the machinery to do all this? That's another place you should be looking to try to get ahead of the game. That way you can get in early and not late. All right. So MP Materials already had a great run. MP Materials can probably see an even greater run from here. Okay. But again, those silent companies that people aren't talking about is where you want to put your money, i.e., the pick and shovel plays to the situation. Take a snapshot of this. All right. Everybody get ready to either screenshot this or whatever you got to do. I'm about to pull it up. This is the list I'm looking at right now. Energy plays, rare earth plays, data center AI, semis, and robotic plays. Okay. Some of these probably have short-term potential and some of these have long-term potential. You need to research, right? Do your due diligence and figure out which ones are which. Now, just a quick short, run through. IREN, medium long term, right? You might even see a short term pump in this for energy. SMR, definitely medium, right? Possibly long term. OKLO, definitely looking at the short term to medium term push, right? OKLO is definitely one of those companies that the government, right, is backing and they're looking to at the same time, right? That run went crazy and it can still go further, but understand where you're at in terms of percentage. That run ran pretty high, right? So there's still a chance for some type of pullback, dump, some sell off or bad news, right? That being said, understand, right? This is a stock we're still watching at a minimum to day trade, swing trade, play the momentum moves on it, play the news on it, but add that to your portfolio. HOND, right? What we were waiting for is actually coming tomorrow, right? The 20th of October. Told y'all we were going to get some more updates, which is basically going to be the decision on or the vote on the merger to become I believe ISMRs with a ticker will become once HOND merges with terrestrial energy. Okay. We already know what's going on. Okay. I even told you guys, put in another article about the Genus program. That's right up the alley for terrestrial energy. OKLO and terrestrial energy were already two companies on a government list picked out, right, for their energy situation. That being said, HOND is merging with terrestrial energy so they can be traded publicly as ISMR. Now, let's break this down. Why do they want to be traded publicly? Okay, there's a good reason and there's a fucked up reason. The good reason, basically to get funding, right? We buy the stock, the company becomes worth more, and it utilizes that money to fund projects, research, and progression. So that's good. This company, right, already backed by the government, they need to go public and raise more money to basically produce at the level they're going to need to produce these small reactors, right, to be attached and utilized for these data centers, because that's what it's for, right? Basically, it's gonna be like that. We need all the energy we can for these data centers to program all this big AI evolution that's coming up. And remember, what are data centers? They are the brain, right? They are the brain of AI. And the body doesn't move without the brain. So data centers are going to be the biggest part of this AI revolution. All right, how do we power those data centers at the level they need to be powered? Companies like Terrestrial Energy, OKLO, these salt reactors, small but high power production. Okay. Now, the bad reason, and this is why I say take caution. We were in HOND down in like the $15, $16 range. Take caution up here. Like I said, I expected to hit 35. It already hit 33 the other day, and it can go even higher. But two bad things you need to watch out for. The buy the new or buy the rumor, sell the news situation, right? Everybody's buying up HOND for this merger. But the other reason companies go public is because they already have private investors that want to make more money on their investment and eventually sell on everybody to collect that money. And that's why you say sell the news, because when it actually happens and you get news of it actually happening, those private investors probably double, triple, quadruple what they have, and they're more than ready to take their profits. Okay, that's another thing you got to watch out for when buying mergers before the merger happens. You need to be early on these SPACs and mergers. And this is your homework. Look up what an SPAC is, right? And look up mergers. Cool. But when buying these SPACs and mergers and you have that conviction, buy them early because you can almost for sure trust that once it actually happens, you're going to get a slight sell-off. You'll probably get a pump, right? You'll get a jump. Like tomorrow, you might get a jump on HOND once everybody sees that the vote's approved, right? But for sure, once the merger goes through, you might see that pump, right? That run up because boom, merger news is going through. Everybody knows by now Terrestrial Energy is that company in everybody's eyesight. And then those private investors, once they see that level they like, they will sell on you. All right. So understand that. That's how SPACs work. That's how mergers work. Those are the reasons why companies merge. One, because they need more money to do what they're supposed to do. And two, because those private investors are now in that greedy phase and they want to make more money on their investment. And that's how they do it. So again, IRE and SMR, OKLO, and HAN, put them on your watch list, right? Determine on your own if they need to be in your portfolio or not. Rare earth plays, right? UUUU, that's the ETF for uranium. MP Materials, LAC, TMC, right? Small accounts, people who have small accounts, things they're just trying to kind of build up, grind up. Pay attention to LAC, TMC, right? Start drawing on your charts and getting those levels, right? Look at where those levels, draw those levels out. Because 50% of the battle is knowing where you're at on the chart, where you're at on the technicals. Is the type of techno where it looks like it's about to break out, where it's been sold off for so long, and now we're about to hit this reversal. That's a good time to get in, right? Now, if you have the technicals that go along with it, and you have the news or the catalyst or something coming up in the future, or it has that use case to give you the conviction, then you have technicals and purpose. That would be a good investment. So small accounts, right? You want to buy these more affordable stocks and kind of build up from there. The moves on LAC and TMC, they're not crazy big moves, so your risk is also mitigated to a low level risk, right? These LAC and TMC are names that are definitely being considered, talked about, and already in the talks with the government, right? That being said, you can see moves in the future of these companies. But again, determine where you're at. If you want to get in now, maybe you let it pull back some more or whatnot. But these four companies are definitely names you need to watch in the rare earth game. Now, of course, data centers, AI, semi, and robotics. APLD, we've been in that one since the low, I think, 11s. Okay. At the same time, there's still room and still use case for APLD to go higher. Why? Because APLD isn't just a run-of-the-mill data center play, right? This is the company that they go to build their data centers. This is the company that they go to utilize the facility for data centers, which is why CoreWeave, which is already a data center company, is making deals with APLD to basically build out a bigger data center down the road so it can use that. NVIDIA in contract with APLD, again, to build out these data centers and use that space for its AI brain to go to. All right. So APLD is definitely in the right place to continue going higher, but understand it too had a good run. So pay attention to possible pullbacks even further, right? We're not scared of pullbacks. We welcome those that gets us in these good companies cheaper. Oracle doing deals with everybody and understanding the next 3 years, Oracle is about to be a superpower, especially with that Stargate project that it's doing. All right. I have my conspiracies about Oracle, but this isn't about conspiracy. We're here to make money. All right. So Oracle is definitely a play you need to chart your levels on, but understand the type of deals it's making and the type of place it has in the future, right? Of this next evolution of plays, data center, robotics, AI. Oracle is at the center of that with all the deals that it has. Not only is it a big player in this AI game, it has basically essentially started this infinite money glitch basically with Nvidia, right? Just back and forth, purchasing trips, or my bad, purchasing chips from Nvidia, and then Nvidia using chips and chip space with Oracle and back and forth, right? Infinite money glitch, especially for Nvidia. Now that could be a good thing and a bad thing, but currently right now, right, we see that as a good thing. Money is going to continue to come in and the partnerships are strong. All right, so Oracle definitely needs to be on your radar. AMCR, Amcor, right? So when it comes to producing chips, building chips, right? Laying out the infrastructure to create more chips, more improved chips, and things like that, right? We have all these chips, but they need to be packaged safely, properly, and effectively and efficiently. There's really only one company that comes to name, and that's AMCR, right? That's Amcor. So with Amcor, it's actually a very cheap company for what it's doing. But the fact that the CEO of Nvidia is now talking about Amcor on the news, you can very well be kind of early, right? Taking a look at AMCR. It might be getting ready to pick up some of that steam further down because he was actually on a news or on a talk show or something explaining, right, the packaging side to these chips and stuff. And Amcor is definitely their go-to. So take a look at Amcor. NVIDIA, of course, this is the dominant player in the semiconductor game, the AI game, and they even have their hands in the quantum game. So do your research, but we all know NVIDIA is the player to watch. And we've already said where we see NVIDIA going 200 plus. All right, it hit like 197. I guarantee we'll see some type of retest of that in the future. Okay, so again, don't miss that train. AMD, right? The AMD's already building out the partnerships, overtaking Nvidia price wise, but not market cap wise. Understand the difference. But that's definitely the two they've been battling it out for the longest, right? That's if Nvidia is number one, AMD is number two. So if Nvidia is going to go up, AMD is definitely going to continue to go up. But understand AMD does make you pay sometimes. So don't get too happy with that one. Chart your levels out. I would see AMD as a swing play or a day trade on momentum currently because it's still in everybody's mouth and eyes. All right. TSM. All right. Again, semiconductor game. Where do we get our chips from? 90% of the chip production happens in Taiwan, TSM, right? Taiwan Semiconductor. So NVIDIA provides the blueprints, right, for making the chips and wafers and stuff. TSM produces it. They build it out in that factory. That is one of the only places where you can get the efficiency that you need to. But it failed, and it's giving you a perfect chance, right, at a discount entry. Again, not 100% play, right? It's one of those maybe test the waters, maybe like 25% of your position, 10% of your position, whatever. But again, currently right now it's at a discount. And of course, Tesla. Something happened with the Zoom, guys. Bear with me. I think it's coming back right now. Okay, yeah, there we go. Can you see the screen? Not yet. Okay. Share screen. All right, sorry about that. It's going to be a little janky, right, until I get back up out of here and back to hometown. So bear with me. Almost there, though. And of course, like I said, Tesla, right? Tesla's going to be that robotics play. All right, Tesla's going to definitely be that robotics play. All right, let's go ahead and take it on to what this market's looking like. All right, so this week, right, Monday, I'm gonna just breeze through it. Monday, U.S. leading economic indicators, not much to worry about here unless some random news comes or Trump decides to tweet again. Okay, so this is one of those play the trends, play what you see, right? Play your setups. Monday should be a nice trading day. Again, when I say nice, I mean shouldn't be anything crazy happening unless it's random, right? So if everything is smooth, your trade should be smooth. Play your setup. All right. I'm not telling you which way the market will go, right? If it'll go down or up. I'm letting you know Monday doesn't have too much economic data to worry about. Tuesday, we have one Fed governor speaking. I'm not too worried about that one. So that's another day where you might be able to get a decent trade in. Wednesday, Fed Governor Michael, one Fed person speaking. So Monday, Tuesday, Wednesday should be days you can trade the trend. All right, understand we're still in a government shutdown, right? We're still in mass government politic manipulation. So yeah, be mindful of that. Then we have Thursday, initial jobs claims, existing home sales, and a couple Fed speakers. again, right, initial job claims and existing home sales, those are important. Those are things you need to pay attention to. So Thursday, take caution. Understand, yes, we have job claims before market opens, but 30 minutes after market opens, you have existing home sales, and that can kind of put a wrench in your trade. So just be smooth, be smart, and pay attention. Friday is important. Friday, I probably would either, if you're up, start paying yourself and take some profits, right? Or just be cautious about how you trade on Friday. If you trade Friday at all, you have CPI coming out on Friday. Now, understand, since we've been in this government shutdown, we haven't been able to get all the economic data we were supposed to be getting every week. So there's a lot of data being withheld currently. Okay. But CPI being some of the most important data coming out after we've been waiting for data to actually, come out, that will have an effect on how the market moves. All right. So whatever, if it's good data to us, market should start moving to the upside or continue moving to the upside. If it's bad data, protect your gains because the market's definitely going to react to that because we've been waiting for economic data for a couple weeks now. And this type of data being the one thing they're going to feed us can definitely cause major movement. So watch out on Friday. Let's see now. That being said, fear and greed meter. We are in fear, right? Again, when we're in fear, we don't actually fear nothing, right? Extreme fear and fear is where we like to start buying stocks, right? That's when everybody sells, those who don't know what they're doing, and we get discounts on good companies. Okay. Remember, you start getting to the neutral greed and extreme greed, stocks start going up, right? Highs become higher. So why would we not buy down here before we come back up here to the greed and extreme greed where stocks start running back up? All right. So understand, right, the ideas behind trading. You want to buy low and sell high, right? We talk about breakouts to day trade or swing trade and get some of that money while it's already running, right? But where investors are actually made is right here in extreme fear. Okay. You buy these stocks while they're dropping and you buy them when they bottom out. That way, you see that come up. But the other thing you need to understand is give yourself time. If you have the money and you're buying shares, great. There is no time limit on shares. But when you're buying options, they all have expiration dates. All right. Understand you need to pay attention to those expiration dates and those strike prices and that implied volatility on those options. All right. If the market's coming down and you're trying to get a good discount on a stock, don't buy a stock a week out or don't buy options that are a week out from expiration. Give yourself time because I can't tell you when it's going to turn around and get back into the money or hit your strike price, right? So give yourself time to do so. Now, when we want to know how to give ourselves time, what do we look at? Catalysts, future news, right? Future dates that might shoot the stock back up. One of those things is earnings, right? If I buy a stock today or buy options today on, let's say, TSM, and I have nothing really to go off of except for it's a great company and I love the setup, maybe look towards the next earnings date, right? And that'll basically put you into next quarter because it just already had its earnings, I believe. So that'll probably give you a 3-month option, right? Buy an option about basically 3 months out from expiration. That's one way to do it. Or if you see this company kind of long term running up, but we don't have any grasp on what's going on right now, just do elite. Buy options that expire somewhere into late or mid next year. That should give you a lot of time. That doesn't mean hold it for that long. If it's still crashing down and about to kill your profits or kill your money, right? Understand risk management. Know your risk levels. Know what you're willing to lose out of those options so that we don't go any further than you want to. But always give yourself time, especially when you're unsure of what'll shoot it up, but you're sure about the company. Give yourself time. All right. Our favorite thing right here, earnings, right? Earnings. We all love earnings. Let me see. So as far as earnings this week go, I'm not really paying attention to nothing else, right? Remember, we look at earnings to basically get volatility, right? To get that volume to trade good price movement. That's why we worry about earnings, right? The second reason we worry about earnings is to basically if we're invested in a company, how are their finances? What's their projection, right? How good do they do this past quarter? So it gives us the information we want. But when it comes to trading earnings, We're looking for volume and volatility from that stock, right? And earnings coming up. So when a stock has earnings, a lot of times, right, you'll see volume kind of move into that stock for people either trying to buy it up before the earnings report come out or sell it off before the earnings report comes out. But either way, that volumes makes for great trading volume. So where you want to get in a stock and it moves maybe $5 in your favor, you need volume for that. Earnings brings volume. So I'm looking at Netflix on Tuesday. What does that mean? Between Monday and Tuesday, you might have some volume moving into Netflix. So you might get some good swings up and down. All right. Next, we're looking at Tesla on Wednesday. Tesla always makes big moves, right? This volume can make the moves even bigger. All right. And that's what we want. We want volume. That way these trades are actually worth trading. And Thursday, right? Pay attention to Intel. All right, pay attention to Intel. And that's really all I'm looking at, but this is for you, right? This you'll find this same earnings report every week in the Discord. All right, so you can go back and look at it and find stocks you want to look at. But the stocks that I find move decent during earnings or for earnings, right? Whether it be up or down, we just want that move to that way we can get paid off our play. Our Netflix, right? Tesla, and of course, Intel is the big boy in the block now. So you might see some profit taking, right? And they're using earnings as the reason to bring it down, or you might see it boom up. But yeah, I'd watch those for some volatility, some volume, and better trades on them. Shout out, Zinx has mentioned Vertiv, VERT, I believe, VERT, I believe. So take a look at Vertiv as well. I haven't looked at it or did any research on it, so I can't talk about it, but definitely add that to your watch list to watch. All right, I'm gonna give you two plays. All right, I'm gonna practice not keeping you guys too long at night. So I'm gonna give you two plays. First one is Amazon. Okay. So now moving to the daily first, right? To the daily. Let's take a look. Amazon, right? We got that M pattern. What is that M? That's actually a bearish look, a double top. Goes up, comes down, goes back up, and gets rejected again. Right? That's a bearish look. Now, I'm not saying be bearish about Amazon, right? I'm just letting you know. My first thought is it can come down lower. Okay. Now, EMAs. This white line is my 200 EMA. If you don't use any EMA ever, you want to use the 10, the 50, and the 200. The 200 is most important, right? Because that is one of the strongest indicators of bearish or bullish momentum. When you get a complete candle close below the 200 EMA, that oftentimes signals you might have a little bit more downward movement to come. All right, Amazon currently is closed below the 200 EMA, but I don't have a full candle below it, i.e., tomorrow starts below 200 and closes below 200. That will be my signal to Amazon is bearish, buy puts or get ready to sell, right? So I have a bearish indicator and a semi-bearish. And then I drew this trend line right here where it taps that line and moves up, taps that line and moves up. This time it tapped the line, right? Came below it, tried to come back up and drop back down. Okay. That is also slightly bearish. So for me to trade this tomorrow, my first idea is, let's say we stay bearish tomorrow and Amazon decides to come down. Ideally below, I would say 211. So you see this candle right here, Friday's candle. If we revisit the low of Friday's low, and we get below that, it's coming down some more, right? And currently overnight, let's see where we're at overnight on Amazon. Overnight market has us at 214.27. All right, so we're not sitting too bad. We're above the 200 overnight. But just to be safe, if we drop below the bottom of Friday's low, which was 211.03, if we're below that, that would mean puts, right? We will buy puts, seeing that Amazon's probably going to come down even lower. That being said, if it comes down, we're looking for price targets, right? 211, if we come over to the past, right? If we come over and it drops below here, what is that next support that it has to hit? This one right here. This will be the next support, right? Next recent support. So that means if it drops below this level, right, that 211.03, we're looking for it to maybe come down to this next support level, right, which is the bottom of this candle right here. And that bottom actually gives us 207.31. So if Tesla drops below 211.03, we're looking for a price target to the downside of 207.31. All right, below that, puts will probably keep printing. Now, let's say Tesla stays above 214, starts picking up momentum. No, my bad, not Tesla, Amazon. 214 gives us momentum and starts to move bullish. What I'm looking at is to get to, first off, stay above this 214 level, right? Because Friday's open and Friday's high. Well, Friday's high was 214.80. All right. So if we open above 214.80 tomorrow, we can see we can see Amazon start to push up even higher. All right. So above 214.80, I already have previous levels, right, of 216.22 from mapping it out beforehand. So I'm gonna stick to those levels. So above 214.80, we can see 216.22. Above 216.22, we can definitely see 217.71. All right. 217.71. And then all I'm doing is going candle for candle, right? Above 217.71, I can see it's hitting 219.220. All right. Because remember, Tesla or Amazon, right? Amazon, it makes nice moves, but they're not super crazy. So we still got to have the modest price target entries. That way we got to stay humble, right? Yeah, I can go to 220 off rip, but let's get those lower price targets first, right? So we have something to work towards. And these are real levels, so it still works in our favor. All right. So again, Amazon above that 214.80, we're looking at 216.22. And then these next candles up of 217.71. All right. The next price target will be 218.59 right up here. And then this wick fill right here of 219.32. Above that, we're hitting 220. All right. We're hitting 220. If Amazon manages to stay above 214 and makes the way above 216 and stay above that, Amazon is honestly looking bullish for a possible swing as long as there's no bad news or more market downtrend. So I want you to keep your eyes on Amazon. Day trade for sure. If it stays up at those levels, it could definitely continue, right? And try to reclaim this trend line right here that I made. And also try to eat up this big red candle, right? For a recovery to continue bullish. But that will probably require some good news or the market itself to start running. So again, we'll just stay modest. All right. The next stock, of course, now I know I slipped and said it a couple of times, will be Tesla. These are the two stocks, right? We can see momentum in tomorrow. So Tesla in the nighttime market is currently at 443.22. All right, 443.22. I love this look right here, right? Because it basically came down, right? And then started making its way back up. So this is an easy one to read. It came down in this slightly V-shaped recovering. We closed above the 10 on Friday, which is also a good level or a good indicator. This 10 EMA right here. At the same time, tomorrow, if we have a candle open above this 10 EMA, right? So anywhere above 433, as long as we open anywhere above 433 tomorrow, which are already at 443, and we close, right? And we manage to close above 441, Tesla is bullish, right? I need you to either write these notes down or remember them. All right, we open above 433 and close above that 441 high of Friday. Tesla is bullish and can probably run into the earnings report as long as no negative news comes out in the market. Okay. Now let's get these levels together though. So Tesla 443, high of 441. So we've already beaten the high of 441. All right. 443.24. So again, overnight market already took out 443.13. So what's our next level that we want to get above? 452 is too much to wait. So we'll drop down, right? We'll drop down to the 4 hour, get a few more candles we can utilize, right? See where we're at. I'm not gonna, let me see, 446. Let's use here. The tops of these candles all pretty much touch right about here. So yeah, above 446, right? Above 446, we can see Tesla run all the way to 450. All right, above 446, I'm just gonna make it a complete, a full regular number, 446, a whole number, 446. Tesla can give us 450. And then above 450, Tesla can also give us 454. And that's all I'm looking for tomorrow in the upward trend of things. It's already at 443. If it hits 444, that's a good sign. But my entry would be above 446 to 450. If we get some momentum above 450, we're looking at 454. And above 454, you already see how high this is right here. You got possibility of going all the way to 481. So we'll see. But again, modest levels, right? Make sure we can actually try to hit our price targets. Now to the downside, right? To the downside, 434. If Tesla gets below, right, that low of Friday, we revisit that Friday low and drop below it, right? 434.90. That is bearish short term to take us to 433, which is the 10 EMA, because oftentimes the stocks, when they're up, they'll try to come back down and retest that 10 EMA. So I'm looking for below 434.90. We're looking at 433. And then below 433, we'll probably retest that whole bottom level, right, of 423. And we know Tesla likes to make $10 moves or more. So that 423 on puts is definitely doable if we start coming down. The same way that 454 is doable above 446. All right, so above 446, we're looking for 450, then 454. Below 434.90 on Tesla, we're looking for 433 and then ultimately 423. And that's what I have for Tesla. Those are the two stocks we'll watch for good momentum moves coming tomorrow. All right, remember the stocks that I put on here for you to start looking for as far as portfolio ads or swing plays and things you want to start researching. All right. That's all I got. Hopefully I made this a nice, quick, smooth, short Sunday for you guys. Do you have any questions? You can write them out in the chat or you can speak them. All right. If there are no questions, as always, I'm going to stick around for about an hour in the Discord. Shoot my inbox, whatever questions you might have you don't want to ask out loud. Otherwise, I will catch you tomorrow to make some money on this market. Appreciate everybody.
Yo, you still want to chop it up, bro? Yo, you still want to chop it up, bro? Or you?
No, yeah. We'll definitely chop it up. Give me like